Hey everyone, it's Dale here. I wanted to give you a little sneak peek into our live trading room where me and other prop firm funded traders trade live every day, and we teach our students how we trade and how they can become prop firm funded traders too. In this snippet from yesterday's room, I'm trading the euro dollar using the volume profile, and I'm commenting on this trade as it develops. And towards the end of the video, I'll also be showing you a neat little trick which you can also use in your trading. So make sure to watch until the end, and here we go. Enjoy. That trade on the euro, it's pretty nice looking one actually, based on the volumes here. There was also a fair value gap right here. There was the fair value gap, and so this was the beginning of the fair value gap. This is where I entered the trade. Now we have a nice little pin bar here, and I'll just trade it with risk reward ratio 1. That means because the trade entry is in here, stop loss is in here, which is above this swing high and also behind this heavy volume zone. So this is the stop loss, and take profit, that will be in here. It's in this heavy volume zone, so it's a good place since this is a risk reward ratio 1, also in a heavy volume zone, so I think that's good. There are currently no news, so nothing that would really, make the market act crazy or weird. I really like that pin bar here on the 30-minute time frame. So let's see how it plays out. Back to the chart now. Looking good. In a moment, I'll just secure the position on the euro. What I'll do is I'll secure the position, moving the stop loss here. This will be the new stop loss, and I'll do that very, very soon. As soon as the price goes just a little bit lower, somewhere around here, then I'll just secure the position, because this is a strong high, and it should hold. This pin bar should hold. If the price goes past this point, then it would be a bit risky trade. Since it is making this little reaction here, I wanted to make the final decision whether I want to secure the position now or wait a bit. I'm just looking at how big the reaction was. If the reaction was just slightly bigger, then it would be easier for me to decide. Like if the price turned, let's say, in here, it would be easier for me to decide whether to secure the position here or no. Right now, it is sort of tough call. I'll still leave it. We are in a downtrend, so I'll be a bit more aggressive with this one. I won't secure the position yet. I'll leave it because we are in a downtrend, and I believe in charts. I believe that there will be a bigger reaction to this. So yeah, if you want to jump in, I think you still can. I entered here at 0214. Looking good. There's some aggressive selling now. I'll secure the position here. Now I don't want to risk it anymore. People often ask me like why I don't secure the position to break even. That's like everybody is doing that, right? Everybody's securing their trades to the break even. In my experience, if you do that, you get kicked out sometimes. Like the price sometimes like to go to that break even, to that place where that liquidity was, those heavy volumes, when they were tested again, and then make the reaction. So a couple of years back, I noticed that the markets are too often kicking me out when I was securing to a break even. So I started to securing the position to the reaction point, which is in here. It lets the trade breathe a bit. It's not as safe as securing the position to break even, but it works better, at least for me. Okay. Position secured. Oh boy, that euro. Well, let's see what happens. We have pin bar this way, pin bar that way. That stinks. We check on the euro. Yeah. Well, let's leave it as it is. Let's see how it plays out. Okay. Good. We have a profit here. Nice little profit on the euro. There was this one thing I wanted to talk about. What was it? Oh yeah, this little comment I had here. Those levels or potential levels. Let me move the profile. Like this part of the rotation was the Asian session, and I often don't give this too much weight, and that's why I thought that what is likely here is price shooting past it, taking the liquidity above it, making a pullback, and then reversal. I saw this so many times, so that's why I placed this little comment here. So just to repeat that, weak high and volumes formed within the Asian session, creating a potential level. Very often this scenario very often works that price goes past it, makes a pullback, and this actually gives you opportunity for a long from here. Let's see how it plays out though. We shall see. Hello, so this is a little follow-up on that comment from yesterday's room. This is the Euro 30-minute chart. This is the scenario I was talking about. These are the volumes, and this is the level I was talking about. And as I predicted, the price shot past that level, taking out that liquidity above this weak high. And then, as it very often happens, and as I predicted, the price made a pullback exactly to that level. And this is not a coincidence. I have experience of this happening quite regularly. The price reacted here exactly to that level. Right, let me remove the drawing so you can see it better. This was the level. Price went past it, made pullback. And this was the long trade entry from here. Exactly as I was saying in the room yesterday. Alright, so that's for that. If you guys are interested in joining us, then go to my website. It is trader-dale.com, and if you click this button, which says FTA, then it will take you to this page, the Funded Trader Academy. There's a video where I'll explain everything more in detail, and after that you guys can book a one-on-one call in here where we can have a little chat and see whether or not this service is right for you. Alright, so that's for that. Thanks for watching the video, and I'll see you next time. Until then, happy trading.